I don't normally mix religion and investing, but today I will. We're going to talk about the 7 deadly sins of investing, and we're going to find out which one you're guilty of. Let's take a look. First up is wrath. Individuals tend to believe that investments they make should always work out, but they don't, and they won't. Getting angry about a losing bet only delays taking the appropriate action to correct it. The loss aversion is a type of thinking that can be very dangerous for investors. The best course of action is to quickly identify problems, accept that investing contains a risk of loss, correct the issue, and move on. Hence the age-old saying, cut the losers and let the winners run. Perfect example, General Electric. I bought this way back in 2006, and I learned my lesson on the way down in the great financial crisis. I cut my losses, but I cut my losses someplace here around $30 a share. I took a beating, but I didn't lose it all the way down to the bottom. Recently, it recovered to above $30 a share, but then it took another dive down. So you should have known at about this point here as it started to move below $30 a share once again. And you can see that here in the MACD. We had the crossover, and then the fast line started to accelerate down to the zero line. That's your signal. Get out, cut the losses. Let's go to the next chart. Next up is greed. The human emotion of greed leads to confirmation bias, where individuals become blinded to contrary evidence, leading them to overstay their welcome. Individuals regularly fall prey to the notion that if they sell a position to realize a profit, that they may be missing out on further gains. This mentality has a long and depressing history of turning unrealized gains into realized losses, as the investment eventually plummets back to earth. It's important to remember that the primary tenet of investing is to buy low and sell high. While this seems completely logical, it is emotionally impossible to achieve. It is greed that keeps us from selling high and fear that keeps us from buying low. In the end, we're only left with poor results. And a good example of greed is gold. We're looking at the Spider Gold Trust, GLD. Now, recently, in the last few years, people have been talking about the market turmoil, inflation, the collapse of the dollar that's going to help gold take a run. But if you remember from a video I did a few months ago, to me, it looked like gold was going to take another dive down. And here we see it. It's heading on down. It's not done yet. We can see that here in the MACD, that the fast line heading down below zero seems to accelerate. You can see that in the histogram and as well in a price rate of change through here to the RSI and the stochastics. Gold is still heading down and it's got further to go. Let's move on to the next sin. Sloth. Don't be lazy. If you don't pay attention to your money, why should anybody else? And it's quite amazing that for something that is as important in our lives as our money is how little attention we actually pay to it. Not paying attention to your investments, even if you have an advisor, will lead to poor long-term results. Portfolios are like a garden. They must be tended on a regular basis. Prune by rebalancing the allocation, weed by selling the losing positions, and harvest by taking profits from the winners. And the best example of sloth is AMAT, Applied Materials. We can see here that all the way back from, say, 2001, this time frame here, all the way into 2015, 2016, Applied Materials didn't do much. It was between $10 and $20 for the most part all the way along. All of a sudden, it took another incline up, all the way up to $60. If you weren't paying attention, you might have missed it. And if you weren't paying attention, you didn't take your profit, because that's the time to take your profit. Even down to this point here, you should have taken profits. Now it's going to continue lower. Let's take a look. Moving here into the MACD, you can see fast line pierced through the slow line, accelerating. That stock market gravity is taking hold. It's heading down. You can see that also here in the histogram, as well as in the price rate of change, the relative strength, and the stochastics. Don't fall asleep. Don't be a sloth. The next sin is pride. And when things are going good, don't be prideful. Pride leads to the fall. You are not smarter than the market, and it will eat you alive as soon as you think you are. So when it comes to investing, it's important to remember that a rising tide lifts all boats. The other half of the story is that the opposite is also true. So an example of pride to me is real estate. We'll look at PSA, public storage. And you can see from way back here in 2009, we had a pretty good run all the way up here to the peak in early 2016. But shortly thereafter, you should have known to sell. But alas, we may have another buying opportunity here. Let's take a look further down into the MACD. You can see at this point here, that was the time to sell in early to mid 2016 when the fast line pierced through the slow line. Headed on down here for the last couple of years or so, but now looks like we might have bottomed here and we're coming up and through the slow line, at least to that point there, and nearing the zero line. The MACD histogram shows us much the same. The price rate of change also reflects a similar pattern. And the RSI, we're at the 50 line, but I think we're going to head up. Here into stochastics shows us as well. We should have sold way back here, and actually we can be buying here relatively soon. Back up to the price chart. We see the peak again here, and now another buying opportunity to build that pride. But don't be prideful. Lust. Lusting after some investment will lead you to overpay for it. Chasing performance is a guaranteed recipe for disaster as an investor. For most, by the time that performance is highly visible, the bulk of that particular investment cycle gain are already achieved. And the best example for me of lust is the bond. And as you have been told in previous videos, right now there's a record short position on bonds, and that's not a good idea. The consensus is generally wrong. So we find ourselves at this point here just under 3% on the 10-year, coming up from all the way down here in, say, mid 2016. That's a long way to go, and the investors are lusting for more. But I don't think it's going to happen. I think these investors and their lust are going to be taught a lesson soon enough. Don't let lust be that sin for you. The next sin on the list is envy. And oftentimes envy goes along with lust and greed. Being envious of somebody's investment portfolio or their returns will only lead to poor decision making over time. It is also important to remember that when individuals talk about their investments, they rarely tell you about their losers. They'll often say something like, I made a killing on this stock and you should have bought some. And that's how the line goes. However, it's often that they have left out that they've lost more than what they've gained. So along with the theme of lust being the bond, I'm going to talk about envy, or here the TLT, which is the treasury bond, the inverse of the actual bond. And the TLT shares here closed recently at 122.05. And again, the consensus on the bond tells me that the consensus on the TLT is down here and that it's going to head up. At least that's my prediction. Moving on down here, you can see the MACD that the fast line is attempting to bottom at this point in here. Last time it was this low was back in 2014, and it went on up. I think the same thing's going to happen. You see the histogram here, Things are improving over the last couple of years or so. Same thing here in the price rate of change. We're moving on up toward that zero line. Down into the relative strength. It's struggling, but it has a double bottom here, and it's trying to make its way up. Into the stochastics, same thing. A bottom here, a bit of a struggle, but it is heading on up. And then lastly, Williams bottomed here even earlier, and as you can see, it's trying to move on up. So in my opinion, this would not be a sin to consider TLT. And the last sin here is gluttony. Never, ever overindulge. Putting too much into one investment is a recipe for disaster. So for me, the best example is Wynn Resorts. And what list of the 7 deadly sins would go without this particular stock simply because Wynn Resorts is located in Las Vegas, Sin City. All right, taking a look at the chart, these peaks that we've had over the previous several years are all very identifiable. Let's go take a look down here. You can see all of those peaks coincide here, 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 and then here. And currently, the fast line is heading down to the slow line at a very rapid pace, and it's going to head down to zero and move on through, in my humble opinion. You can see that here in the histogram, as well as the price rate of change, the relative strength, the stochastic, and to the Williams. Everything is heading on down. Going back up to the price chart, even though gluttony might be one of my favorite of the 7 sins, I would say for Wynn Resorts, get out. Cut your losses and don't gorge on any more of Wynn Resorts. So for today, that's ChewDog Charts. Thank you.